It's 5:23 a.m. Your phone is charging. Your alarm is set for 6. But Vusi is already awake. He's standing on his balcony in his silk robe, the one he bought after his last degenerate play cashed out, watching his pride and joy get swallowed by a SARS recovery truck. That's an 800,000 Rand Golf 8 GTI, financed, insured, and now impounded. Vusi isn't a scammer. He's a front-end developer earning 65,000 rands a month. He's a shop dresser, always buys the first round, especially when the bags are pumping. Just last month, Vusi turned 10,000 rands on a meme coin into 100,000 rands profit. Clean exit. He didn't even withdraw to rands. He simply swapped his USDC profits and thought, if it's not in my bank account, SARS can't see it. Vusi's thinking was wrong. So wrong that today, SARS wants 135,000 rands from him. Not just the tax, penalties, interest, compound interest on penalties, the kind of figures that turn a good month into a 5-year repayment plan. Now, before you close your Luno app and pretend this doesn't apply to you, take a moment. Because while the 2026 budget brought the hammer down on the crypto trading degens like Vusi, it also quietly dropped some of the biggest wealth-building opportunity tools we've seen in a decade. Tools that reward patience over frantic panic. I'm Vuyo, and today we're going to talk about exactly how the new SARS AI algorithm works, why 2026 is the year the quick win goes to die, and the legal strategies that let patient, compliant investors sleep through the night while the taxman combs through crypto traders' history. This message is time-sensitive, so let's master your money. For years, cryptocurrency trading was the ultimate regulation blind spot. It was the Wild West. You could swap and trade coins at a friendly gathering, make a profit in the shadows, and as long as you didn't buy a house in cash, SARS was guessing. But as of the 1st of March, 2026, the Crypto Asset Reporting Framework, or CARF, is officially live in South Africa. This isn't a new law, it's a global data sharing treaty. And here's what matters. Every exchange you've ever touched, Binance, Luno, VALR, Kraken, Coinbase, now has a direct pipeline into the SARS server. They aren't just sending your name and ID, they're sending a forensic timeline of your financial life, every single trade, swap, and transfer between coins, every wallet withdrawal, even to your private, cold storage, your IP address, your device ID, your behavioral patterns, that TikTok influencer telling you to just use an offshore exchange. She's not giving you advice. She's giving you a one-way ticket to a forensic audit. But CARF is only one leg of the trap. SARS is now running Project Modernization 3.0. Imagine an AI spiderweb connecting 3 specific nodes of your existence. Node 1, the banks. They see those regular 25,000 Rand side hustle deposits that don't match your IRP5. They see the cash you withdrew the day before your car deposit. Node 2, INATIS. You register an 800,000 Rand GTI but tell SARS you're a junior dev earning 65,000 Rands. The AI flags that mismatch instantly. It doesn't care that your grandmother helped with the deposit. It just sees numbers that don't add up. Node 3, CARF. Your crypto data delivered fresh every 24 hours. Every trade, every swap, every innocent transfer to your friend's wallet. The AI cross-references all 3 simultaneously. It's not a tired human in a beige office squinting at printouts. It's a machine that never sleeps, never accepts your excuses, and definitely doesn't understand black tax. If your lifestyle and your declared income don't shake hands, the system flags you for an automated audit before you've even had your morning coffee. And here's the part they don't tell you. The audit happens first, the questions come later. By the time you get that letter, they've already seen everything. To survive 2026, you have to choose which character you're playing. Let me show you the difference. Meet Vusi, the fox. Vusi treats crypto like a casino. He's leverage trading daily. He's chasing meme coins on dexes. He's making multiple swaps a day. He's chasing the soft life at 100 kilometers an hour, checking prices 50 times before lunch. Here's what Vusi's brain doesn't understand. Every single swap is a taxable event. The second Vusi clicks confirm to swap Bitcoin for Solana, SARS sees that as a sale of Bitcoin. A debt is born right there, not when he withdraws, not when he cashes out, right there when he confirms a swap transaction. Because Vusi trades with high frequency, sometimes 20 swaps in a week, SARS classifies him as a trader, not an investor, a trader, and traders don't pay capital gains. Their profits are ordinary revenue, taxed at his marginal rate. For Vusi, earning 65,000 rands a month plus his crypto wins, that's the 45% bracket. Vusi made 100,000 rands profit. He didn't declare it. The CARF AI triangulated his lifestyle. The GTI, the apartment upgrade, the soft life flexes he posts from Max's lifestyle. The AI flagged him. SARS sent the letter. Now here's where the facts and figures get aggressive. When SARS catches you hiding money, they don't just charge the tax, they charge an understatement penalty. And contrary to what you'll read on Twitter, it's not automatically 200%. It's a sliding scale based on how you hid it. Were you just negligent, filing late because life got busy? That's 25%. Did you take a reckless position, ignoring clear rules? That's 50% to 75%. Did you actively conceal? Use mixers, offshore exchanges, structured cash withdrawals? That's 150% to 200%. SARS looks at your behavior, and they have the data to prove intent. Vusi's 45,000 rand tax bill with penalties became 135,000 rands. He doesn't have the cash, so SARS garnishes his 65,000 rand salary at source. His employer gets the order before payslip day, attaches the GTI, towed at dawn, sold at auction, freezes his bank accounts. He can't even Uber to work. Soft life just became hard time. Now look at Tumelo, the Tortoise. Tumelo earns the exact same 65,000 rands, same NSFAS debt, same family expectations, same pressure to make it quick. But Tumelo is a student of mastering his money. Tumelo buys spot Bitcoin. He moves it to a cold wallet. He doesn't check prices 50 times a day because he's not trading. He's accumulating. He dollar cost averages every month, same amount, same day, no emotions. Because Tumelo holds patiently for more than 3 years. SARS classifies his profits as capital gains. Only 40% of his profit is even eligible for tax. His maximum effective rate? 18%. Same market, same profit, same year. Vusi pays 45%. Tumelo pays 18%. That 27% difference, I call it the sleep premium. Tumelo sleeps through the night. He doesn't jump when his phone buzzes. He doesn't panic sell when Twitter screams bear market. He just keeps accumulating, keeps holding, keeps letting time do the work. The fox chases, the tortoise outlasts. While the news was screaming about the CARF trap, and don't get me wrong, it's real. The 2026 budget also quietly dropped wealth-building tools that the tortoises are already using. These aren't loopholes, they're features. Let me show you. Cheat Code 1. The 45,000 rand harvest. The annual capital gains tax exclusion just increased. The drafts said 50,000 rands, but the final number landed at 45,000 rands. Still a significant jump from last year's 40,000 rands. Here's how Tumelo uses this. Every year, he sells just enough crypto to realize exactly 45,000 rands in profit. He pays zero tax on that 45,000 rands, not a cent. He reinvests the full amount immediately, buys back in, resets his cost basis, keeps compounding. Do the maths. Over 10 years, that's 450,000 rands in profit moved completely outside the tax net. Tax-free compounding. Legal, accessible. And SARS designed it this way. They want you to invest, to realize gains, to keep money moving through the economy, but only if you do it inside their rules. Cheat Code 2. The TFSA upgrade. Your tax-free savings account limit just jumped to approximately 46,000 rands per year. We're waiting on the final Gazette confirmation, but Treasury signaled the increase. Now listen closely. You cannot hold raw Bitcoin inside a TFSA. That's illegal. Crypto doesn't qualify as a qualifying investment under current regulations, but Tumelo uses proxy exposure. He maxes out his 46,000 rands by buying JSE-listed ETFs that track global tech and crypto-adjacent innovation. Satrix, MSCI World, Signia, Itrix. All that growth, 100% tax-free, forever. No capital gains, no dividend tax, no declarations. That extra 10,000 rands a year compared to last year's limit? Over 15 years of compounding at market average returns. We're talking about 400,000 to 500,000 rands for his kids' education, completely tax-free. That's not a cheat code, that's a generational wealth transfer, baked into law. Cheat Code 3. Bracket creep relief. For the first time in years, government adjusted tax brackets for inflation, 3.4% across the board. So, if you're a shift worker doing heavy overtime, your colleague Amanda at the plant, your cousin working double shifts at the warehouse, this matters. Usually, that hard-earned overtime pushes you into a higher bracket where government takes nearly half. This adjustment means you actually keep your hard money in your pocket. Real relief. Real recognition that the people working the hardest shouldn't be punished for it. Now let's take a step back and investigate the reasons behind these changes. Why raise tax-free limits while deploying an AI that sees everything? Because the macro picture of South Africa has flipped. If you think of SA as a giant business, for years the business was failing. Think of the days of load shedding, rampant state corruption, and near 0% economic growth. But the 2026 data tells a different story. Government received a revenue windfall, 21.3 billion rands, extra came in from mining exports. Commodity prices held, production stabilized, and the Treasury caught a rare surplus. The rand strengthened to 15 rand and 85 cents against the dollar. Not 2010 levels, but the strongest we've seen since 2021. Exporters aren't happy, but importers, your electronics just got cheaper. The JSE hit an all-time high of 126,000 plus points. Companies are reporting profits, dividends are flowing, and local capital is staying in the South African economy. Bond yields dropped 300 basis points. That's finance speak for. The world finally trusts us to pay our debts again. International investors are buying South African government bonds because they believe we've turned a corner. Here's the plot twist. The economy is stabilizing. Government is giving you more room to build wealth, higher TFSA limits, higher exclusions, bracket relief, because they want you to invest in this new SA. They need your capital, your participation, your long-term commitment. But in exchange, the Wild West days of crypto are over. They've given you the tools to be a Tumelo, so they have zero mercy for the Vusis who think they can still play by 2021 rules. AI and CARF ensure that everyone pays their fair share of the recovery. No exceptions, no excuses. The social contract just got rewritten. You get more room to build, but you have to build in the light. If you've been acting like Vusi, trading on leverage, swapping coins daily, hoping the algorithm doesn't notice, your window is closing. It closes on March 1st. Here's your emergency fix. Step 0. Stop, breathe. Don't panic withdraw to cold storage. Don't move everything to a new exchange. Don't send your crypto to your cousin's wallet. All of those actions are also tracked. CARF sees transfers. It sees patterns. Trying to hide now after the fact is how you move from negligent to intentional on that penalty scale. Step 1. The VDP window. Look up the Voluntary Disclosure Program. Section 227 of the Tax Administration Act. It's a legal safe harbor. If you confess your crypto gains to SARS before the AI flags you, they waive criminal charges and reduce those penalties dramatically. You just pay the base tax plus interest. But here's the catch. Once CARF is fully integrated and the AI has already flagged your profile, the confession isn't voluntary anymore. The protection vanishes. The window is now, not next month, not when I have time. Step 2. Get your numbers right. You cannot calculate 5,000 microtrades on a piece of paper. You will lose. Your numbers will be wrong, SARS's numbers will be right, and the system doesn't accept "I tried my best." Use API software. Recap, Coinly, CoinLedger. They pull your data directly from exchanges and generate reports in the exact format Binance sends to SARS. If your numbers match their numbers, you're safe. If your numbers don't match, you don't get to argue. You get assessed, and assessed means penalties. Step 3. Entity arbitrage. If you want to be an active trader like Vusi but keep your money, professionalize. Register a Pty Ltd company. Trade in the company name. Corporate tax rate, 27%, not 45%. Plus, you can deduct everything. Your laptop, your fiber, your home office, even part of your data bundle. The business pays for the tools, you pay tax on the profit, and SARS respects the structure because it's registered, compliant, and visible. This isn't hiding, it's structuring. And in 2026, structuring is survival. Here's the final truth. The one they won't put in the budget speech. Tax evasion will destroy your life. The penalties, the frozen accounts, the criminal record, it's simply not worth it. I've watched friends lose cars, homes, marriages, all because they thought they were smarter than the system. But tax avoidance? Structuring your life using the exact rules government just gave us in the 2026 budget? That's not cheating. That's mastering your money. Vusi ignored reality. He chased the quick win, celebrated the degenerate plays, and assumed the algorithm wouldn't notice. Now he's watching his GTI disappear around a corner, wondering how 100,000 rands profit became 135,000 rands debt. Tumelo respected the maths. He harvested 45,000 rands tax-free. He maxed his TFSA. He held through the dips and slept through the noise. His wealth compounds while he sleeps. Which one are you? Don't let God's timing turn into SARS timing. Get your software sorted. Speak to a qualified tax practitioner. Not your friend who knows crypto, but a registered professional who understands CARF and the new rules. The window is closing. I'm Vuyo. This is Vuyo Invests. Shup shup.